Hey guys, welcome back. In today's video, we are talking about the AMC short positions revealed, shorts secretly buying, the Citadel liquidations, and many more in this video. Firstly, we're taking a look at this. This is a good chart to show the significance of the spike in AMC recent short interest. In yellow, the price of AMC peaked at 211. This means all of the shorting in that time occurred at or below $2.11. Those shorts only see gains if the price holds under 211 and they purchase at a lower price. If they hold those shorts and the price surpasses 211, they will be facing unrealized losses and could scramble to buy. Now, firstly, I want to make some heads up before we go further into this. Now, personally, what I believe is that the short interest we are looking here is only for one batch of float that has been shorted at 211. Because we know that the real short interest, the real shorted shares, are obviously way higher than the numbers that we are looking at here. We've known that the float have been sold over to us 10 times, 20 times, 50 times, or even more to us. And so this is what I say when I say that the short interest we are looking at here is only for one particular batch of shorts. But regardless, it is still damaging to them if we are able to get the price above $2.11. And so this is obviously a very good data for us because this shows why they're worried about AMC every time it goes up. So if they were to have their short position somewhere around $2, what we talked about here, $2.11, if we're looking at it around this level, you can see that this is when we saw the price going up, this is why they were afraid. This is why they needed to suppress AMC, is why we saw, you can see here, the short interest going to 24.22%, where we saw the short interest actually double in just a matter of few days. That's because this small spike that we saw here, that was enough to get them to be afraid. And they needed to make sure that the price doesn't continue to go up because they know how easily it is for AMC to increase in price when they don't do anything. When they're not suppressing AMC with 70-80% dark pool, when they're not suppressing AMC with constant spoofing, with constant FTDs, with constant tokenizations, they know that AMC can go up 10%, 50% easily in a day. And so that's why we saw this suppression happening. And that's why we're seeing the price declining, because they know that even as it goes above this small level that's up here, this 211 level, it will already put them in the losses for just that batch of short. And when we talk about how many shorts there are, you can see how the number goes up then even higher. You have to realize ultimately no AMC shorts have closed. Credit Suisse and Melvin Capital, for example, never would have folded had they closed. Those losing positions are being rehypothecated and more created and destined for liquidation since AMC found ways to survive. Now, one of the biggest reasons for why I've always said that I believe that AMC shorts haven't closed is because if they have closed their positions, if they are not risking anything, and the fact that AMC goes up in price wouldn't affect them, we won't be seeing everything that goes on for AMC. When I say this, I'm talking about the constant articles that you'll see when they compare AMC with, stocks that they shouldn't be comparing. When they talk about the box office and they don't mention AMC, we won't be seeing the countless dark pools that we've talked about. Industry average should not be 70-80%. And when we look at AMC, we know that it's there. The very fact that tokenizations exist for AMC, for GME, and not for all of these other stocks, these are all reasons for why I believe that AMC shorts haven't closed. And it's why we've seen companies like Credit Suisse obviously be damaged. And so you have to realize this. And this is why, like I said, I believe that they have never closed. And it's why we see things like short interest doubling, is why we see things like what we talked about here with a batch of shorts being sold at 211. Another thing is you can see here, 33 million shares traded, 24 million never hit the lit market. And this is what we've said with the constant use of dark pool on AMC, is why I personally believe they have never closed. And you have to realize this is a big amount. The very fact we are looking at 12 times, you can see here, of the stocks volume in the off exchange than the NYSE, it already tells you a lot about what's going on. It tells you a lot about the things that goes on in this market, the manipulation, the suppression that goes on in this market. Now, it also isn't a surprise when this is happening because look at what one of the biggest shorters of AMC is doing. Fintel data shows Susquehanna has longer hedge position spread across multiple funds. It looks like they are hedged for a strong move upwards in AMC, where we see these positions. So a big reason for why we also see the dark pool is because short sellers have realized that they can't get out of this position. They can never beat the apes. And so what they can do is to try and protect themselves as much as possible by buying AMC. Now, when they do buy into AMC, one thing they're trying to avoid is bring the price of AMC up, because they know that when they have to buy these huge bulks of AMC, they're buying tens of millions, potentially even the hundreds of millions of AMC. And this will obviously, under normal circumstances, bring AMC up. They know that if AMC was to go up in 10%, 15%, 50%, it would invite too much investors. It will attract too many investors. And they also know that apes will hold on to these shares. And so the best thing that they can do is buy as much AMC as possible without having any effect on the price whatsoever, while still releasing these articles trying to convince people to sell and stay away from AMC so that they can secretly accumulate as much as possible. And that's what they're doing right now. It's why we talked about everyone's quiet about, or at least the media is quiet about the institutional ownership about AMC. They're quiet about the dark pools of AMC, despite the fact we've seen it's a lot of buy orders in the dark pool. That's because they don't want, the institutions don't want people to realize that they want to buy AMC. And so that's why we're seeing with this. Another big thing about a spike in dark pool, as what we've seen recently, could be the potential of certain institutions actually liquidating. So firstly, if we take a look at this data, this is the SEC data for the first half of 2025. Now, what we saw is this particular spike that happened over here. Now, the reason why I'm highlighting this spike is because the last time we saw this massive spike is around the time Credit Suisse began to implode. So we knew that Credit Suisse exploded because of the toxic swaps they held of AMC and GME. And so if we use the same logic of the spike we saw then was because of institutions imploding, in this case Credit Suisse, is this spike we're looking at here now the same case? So we're looking at another institution that are imploding, potentially because of the same reasons, the toxic swaps of AMC and GME, or just holding on to these toxic short positions of AMC and GME. Now, the reason why I say this is because it's no surprise that this could be the case. When you take a look at what potential synthetic shares that exist out there, you can see I believe there are over 40 billions of AMC to cover, and this cannot go on forever. Now, I won't go too much into this because everyone has their own understanding of what it could be, right? We don't have an exact data to how many synthetic shares there are. There could be 40 billion, there could be 50 billion, there could be 20 billion. We've seen the tokenizations, we've seen the FTDs. So I'm not saying that I don't think this is true. I'm saying that because we don't have the exact data, we will never know. What we do know is that it is very likely to be in the billions, and it's obviously very, very high. Now, with understanding that, you'll know that if, for example, there is 40 billions for the sake of argument, and we're seeing this dark pool going, and we're looking at firms needing to cover or they can't contain it, you can see why we talk about firms being liquidated. Because when you go further into this, is that what we saw with the gold market, what we saw with the silver market, can easily happen to AMC. It can easily happen to GME. We could instantly see trillions of dollars of value being transferred into AMC, being transferred into GME. And so this is why we say that banks are worried about AMC, banks are worried about GME, and more importantly, they're worried about the short sellers of these stocks, because the short can go into infinite losses. And that's what they are afraid. That's what they're trying to prevent. And it's potentially why we talked about, again, the 40 billion, but more importantly, why we talked about this dark pool spike that hit a new all-time high. And now, when you look into it further, one of the firms that we could be looking at that could be the reason for this is Citadel. It would be a shame if Citadel were margin called on a $944 billion leveraged Japan carry forward trade. Now, what we saw is Michael Burry talking about essentially the Japanese 30-year bond yield. Now, this is something that we have been talking about on this channel for a very long time now. By now, you should know the significance of this. And what we're looking at is how risky it's getting and why we could be looking at this imploding at any time. So we could easily be seeing the market exploding. And Citadel has talked about this before in the past as well. And so we know that this has a massive relationship with Citadel. We know that this could easily bring Citadel down. And so going back to what we've said with the dot pool is one of the reasons why I believe we could be looking at. Another thing that Citadel is trying to do right now is that they're suing the consolidated audit trail, which enables regulators to obviously identify illegal, manipulative, or disruptive trading activity in real time. So what they're suing is the CAT system. What the CAT system is supposed to do is to bring transparency into the market. So you can obviously see how ironic this is and what is happening. And so we already talked about the Japan trade, and now we're looking at the fact that they're suing something that brings transparency. So why are they suing this? Why are they unhappy with the CAT system? That's because when you have a system that brings transparency to the market, we're seeing these firms which once relied on all of these tactics to then fail to do so. And that's why, we are seeing this. That's why what we are looking at, and it makes a lot of sense. Now, as of today, we saw that silver was over 115, and this is obviously very significant. And we are only going to continue seeing the silver prices going up because of what's happening in the market, because of how worried everyone is. As of the recording right now, we are looking at silver prices to be at $118. Not only that, we're also seeing gold extending this momentum as well. We saw gold go over 5,300 today, another significant thing for the market. And the reason why I talk about this is because, firstly, this means a lot when we look at the silver prices going up, when we look at the gold prices going up, we're looking at HYMC going up. That's a big thing for investors like for apes, but also for AMC as well. Secondly, is because we're looking at banks to have been caught on the wrong side of this. So they are also losing out on tons of money. Not only that, the gold monthly chart is screaming a biblical financial collapse as we see the currency devaluation is staring us between the eyes. Now, we talked about the dollar index. We're seeing it at an extreme low. We're seeing it at the gold chart going crazy, the silver chart going crazy, both reaching new all-time highs, whilst the dollar is going down. So this is already a foreshadow of what's about to happen in the future. Not only that, as we see this, the CME raises margins on silver futures from 9% to 11% of the notional amount. And now we've already talked about this. We talked about why this is bad for the short sellers. We talked about how this could easily bring it up. This is something we mentioned in the past when it was first announced. And so, you can understand how this is going to affect the price, and potentially this is going to accelerate further the increase of silver prices. Another big thing, UBS halts trading in Chinese silver fund. Now, we already saw that UBS could also be caught on the wrong side, and that they could be heavily in the losses. Now, not only are they already being affected by the silver prices, they have held on to the toxic swaps of AMC and GME for a very, very long time. And so the fact we're seeing this happen, the very fact that this is affecting them should also show you, that potentially they'll be forced to cover the swap positions as well. And so this is also a big thing. Furthermore, another confirmation of why I believe silver prices is going to continue going up is because in China, in Shanghai, we're looking at $132. Now, we've already talked about how this is a leading indicator. If you don't believe me by now, check it out. We've talked about this so many times, and we've already been predicting why silver is only going to go up. Another big thing is SLV that has a series that will be made closing only contracts. You're going to essentially view this as taking away the buy buttons about what happened to us for AMC and GME. And then you'll know why they're doing this, because we are already familiar with this. And finally, BIS reports global OTC derivatives have hit a new all-time high of $846 trillion, with over half being held by these 6 banks: JPM, Citi, Goldman Sachs, Bank of America, MS, and Wells. And so this is something that, you need to take into consideration of, and it goes back to why I say why I believe that we could be looking at a bank or a hedge fund to be blowing up when they're this risky. As always, none of this financial advice. Do take advice on your own soul. Make sure to do your own due diligence and research, and I'll catch you guys next time.